Welcome everybody to our June 11th, 2024 HubSpot User Group for B2B Technology in the USA. We have Pete Caputa here. He is the CEO, founder, everything over there at Databox, and he's going to be talking today about how to predictably improve your B2B tech company's performance by leveraging data, which I know is something a lot of B2B tech companies struggle with.
Cool. Thanks, Jen. Should I get started?
Yeah, I think I have a little intro for me on the next slide if you want to
Okay, yep. I'll hit that.
advance that there.
Yep, go ahead.
All right. Well, I'm only talking for this one slide, and here's the end. But my name's Jen. I'm the owner of Kiwi Creative. We are a leading HubSpot Platinum Solutions partner, and we work exclusively with B2B technology companies, which is why we host this topic every quarter. We are going to have another one in September where one of the Academy professors is going to talk about Service Hub. But for now, we'll hand it over to Pete to talk all about data.
Cool. Thank you, Jen. Pleasure to be here. I think I was just telling you before we started, this is actually the first virtual hug I've ever spoken at, which is kind of funny given I was the 15th employee at HubSpot and was probably the first one to put on like a hug-like event early in 2008. We had like 100 and some people come. We taught them how to do inbound marketing. But my background is I'm an engineer, first and foremost. I went to school for engineering, did engineering for a little while after school. Started a startup, realized I had to learn how to sell and market the business, and ended up doing that for a number of years before I ended up getting connected to the founders of HubSpot and ended up joining the team as the fourth sales rep there and the 15th employee. About a year into my time there, I ended up starting the partner program for marketing agencies, now called the Solutions Partner Program at HubSpot. And as I built that up, went from individual contributor to manager to sales director to VP in sales and marketing and running that program, and got it to about 3,000 partners. My most proud thing is all of the partners that we're able to help grow. Back in 2008, not only was inbound marketing relatively new, but having companies or agencies that offered inbound marketing was a new thing as well. And so by introducing inbound marketing and HubSpot to so many agencies and to their clients, I think we had a pretty big impact on all those people. Got a little bored at HubSpot, which sounds funny, but after about 9 years there, I was looking for my next challenge. Wanted to return to startup world, ended up meeting the founders of Databox, and they had built a product but really had no market traction. So I joined when there was just 5 customers, some of which I introduced to them before I joined. And then we've grown it to about 3,000 customers. I'm very active on LinkedIn, publishing consistently on LinkedIn. And so if you're interested in hearing more on my thoughts afterwards, good place to connect is on LinkedIn. Happy to try to help if I can help you with something. All right. So the name of the talk today is how to predictably improve your company's performance using data, which sounds dry and boring. But as an engineer turned sales and marketer, it's really near and dear to my heart. And based off of things that I learned both at HubSpot and at Databox and applied at HubSpot and Databox. But first, let me talk a little bit about why predictability is important, why it's important to me, at least. I think especially over the last few years, the world's been fairly unpredictable. A lot of different challenges have been thrown at us as owners, as executives, as individuals. Inside companies. These are just some things that I can remember over the last few years that seem to really throw a wrench in how business is done. Of course, COVID was the big one. But at Databox here, we were Silicon Valley Bank customers, which, if you might remember a few years ago, was insolvent for several days and unclear whether they were going to allow their customers to access their own funds. So that was a big one for us. There was, I don't know if you remember, there was a stock market crash that lasted about 4 months in 2020. Of course, there's been other things in marketing and sales that have had a big effect, right? Generative AI seems to be disrupting both good and bad ways, how we go about selling and marketing. Google's algorithm constantly changing, but more recently showing generative AI results, which makes SEO harder. And so it just seems like over the last few years, especially, there's just been so many changes kind of thrown at us. And as a CEO, with responsibility to my shareholders, to the team members here at Databox, and to our customers and our partners, the unpredictability is really challenging, right? And so what I strive for is having predictability in the business so that I can feel confident, despite all the external changes happening around me, that we are in control of the business. Now, of course, I can't control many things, just like none of us can really control many things, right? Viktor Frankl is the first one to really talk about this. He was in Germany and Nazi Germany, and dealing with awful conditions there, and he was kind of brave enough and thoughtful enough to say something like this. And also in our world, it seems rather trivial that we would be able to accept these things too, right? For most of us, at least. And this is actually this quote here: "Forces beyond your control can take away everything you possess except one thing: your freedom to choose how you will respond to the situation." You might have heard the phrase "control the controllables." That's really he was kind of credited with that concept. Other people have simplified it down to "control the controllables," but this is really the origination of that quote. And so in an unpredictable world, it really comes down to what can we control in our world to help us make sense of it. And this is a great quote from Carl Sagan. If we lived on a planet where nothing ever changed, there would be there would be little to do. There would be nothing to figure out. There would be no impetus for science. And if we lived in an unpredictable world where things changed in random or very complex ways, we would not be able to figure things out. So again, there would be no such thing as science. But we live in an in-between universe where things change, but according to patterns, rules, or as we call them, laws of nature. And of course, he's speaking about physical world, the physical world, where there are laws of natures and patterns and rules that we can observe in order to understand what seems like an unpredictable world. But in reality, it's just complexity. And the same kind of thing occurs in our businesses, where we have complexity, not necessarily unpredictability. And it's really our challenges as leaders of companies to understand that complexity, potentially model it, but certainly measure what we can in order to understand it and know how to influence it. This is a great quote from a woman named Stacey Barr, who's much more contemporary than Frankl and Sagan, and she focuses in on performance management in companies. And so here, our world is in between these extremes of perfect predictability and perfect unpredictability. There's variation, but it's not the product of complete randomness. It's the product of complexity, and there's order in this complexity. So in this in-between world, we have a use for measuring performance because it helps us quantify the variation and observe the patterns of causation, what cause and effect. It helps us learn how we can influence performance by reducing variation and by using or changing these patterns. And performance measurement in a company is an application of science, similar to what Carl Sagan was talking about, to deepen our understanding of the complexity in our organizations and speed up our identification of the patterns within that complexity so that we might get better and better, but never perfect at creating the results we want. So in practicality, it's really about understanding the complexity in your business, understanding the cause and effect, understanding the variations and why they occur, so that you can have that predictability. And so that's what we're going to talk about, how to do that very practically. So I'll get out of the philosophical world here in a minute and talk very practically about the things you can do in your business to understand the complexity and manage it. First, want to share a few stats of why I think I'm somewhat qualified to talk about this. At HubSpot, we were very numbers driven. We used to have a saying where we'd say everybody at HubSpot has a number over their head. And it was pretty true. Not every engineer per se, but everyone in the go-to-market team, sales, marketing, customer success, et cetera. And even many of the product managers had numbers that they were responsible for achieving. And as a result, you can see this is the growth from HubSpot. I actually have the data back to 2007, but it doesn't even show up because it was so low, even though it was hundreds of customers in those years. But you can see here that HubSpot's focus in on numbers really has enabled predictable growth. We've achieved similar predictability here at Databox. We're nowhere near as large as HubSpot. We also have largely bootstrapped the company, whereas HubSpot raised about $200 million to get to, I think, 2014 numbers there in the chart previous. Databox has raised a whole lot less. We've raised only $1 million since I've joined the company, and since we've grown from basically zero revenue to where we are now, just under 10 million in ARR. And so a lot of the lessons that I learned at HubSpot, I've applied at Databox. We've also taken best practices from systems like Entrepreneurial Operating System or Objectives and Key Results, and kind of leverage those methods and those processes to bake into the way that we run our business, and the way that I'll share, the ways that I'll share you can achieve predictable performance in your business as well. How are we doing, Jen? I can't see the screen, so as I'm presenting, so I assume we're good to go. Continue.
You are good to go. Power on.
Thank you. Okay. So for the agenda today, I'm going to share with you a lot of data-backed research that we've done on best practices for how companies perform at their best. One of the data sets is based off of data that we've collected through a survey, and one of it is based off of data that we've aggregated anonymously from customers in order to identify the habits of high-performing companies. So I'm going to dive into the habits of high-performing companies, which is based on the survey first. So we did this state of business reporting. We ran this research in 2023 and published in 2024. We're actually in the process of rerunning the research now in order to continue to collect data and validate our findings. You can, however, read the report that we published in 2024 here at State of Business Reporting. If you just Google State of Business Reporting, you'll find it. Who we surveyed, about 240. We actually surveyed a few hundred, 300 and some respondents, but we used about 240 of the respondents who completed the full survey, and where we could validate their data to some degree. And this is the mix of the companies that we surveyed. You can see it's pretty all over the map in terms of B2B versus B2C. There is a decent percentage of marketing agencies or media companies that completed the survey, but also large number of consumer services as well as B2B companies. So it's pretty even split there. The size of the company tend to be the SMB in the SMB realm, right? A little heavier on the S than the M, but you can see here both the amount of revenue that the typical respondents generated, as well as the deal size of their sales. So the types of, you can see here, for example, that 21.2% of the survey respondents sold a product between $10,000 and $50,000 to their clients. So it gives you a feel for the type of companies that were surveyed. It's a pretty broad range, heavy on the SMB side versus, say, enterprise. And so what we identified here through the survey is what they do around their business reporting processes that enables them to be successful. The majority here, as you can see, say that monitoring and reporting greatly improve their performance. And so if you're not monitoring your performance on a regular basis, usually daily at the individual or managerial level, and then at least weekly on the executive level, if you're not doing that, then you're way out of the norm of most companies. You can see here that almost all of them, all the respondents said that it greatly improved performance or somewhat improved performance, with a large majority saying greatly. They also credited it with helping them improve their business in quite a few number of ways. You can see here that, of course, enables better monitoring and progress of campaigns or projects or teams. I think that's the primary reason why most companies are monitoring and reporting out their performance. You can see here that 75% credited their reporting process and monitoring process with that. but it also increases team effectiveness. Also allows them to identify trends more easily. If you can see a number is moving one way or the other. Because the team is focused in on improving performance and their own effectiveness, it then helps with improving financial performance for a good portion of the respondents. You can see team and individual accountability is really high up the list for reasons to do it. We introduced new goals to different teams this year here at Databox, and I can point very directly to the trend line increasing. And so I think by holding, monitoring and reporting and doing goal setting, you're going to drive accountability on the team and to give them an area to focus on in terms of where they should improve. Better alignment between teams. This is a problem we had early on at HubSpot is the marketing team and this between the marketing team and the sales team. I think most people think of HubSpot as having that relationship really tight where marketing is driving business for driving leads for the sales team. And that was certainly true at HubSpot. But there were times when we were out of alignment where the marketing team was generating leads that weren't ready to talk to sales or weren't interested in talking to sales about the things that we were selling. And so there's always a challenge there. And so when you can assign numbers to those things and track them and report on them, you certainly get better alignment. And then, of course, improved ability to plan future investments. We'll talk a little bit about that later. And then to track the impact of previous decisions or investments. As CEO here at Databox, I'm always making different decisions based on the data that I have, but it's not perfect data. And so always want to be saying, hey, we made that investment 3 months ago. How is that going? And did that work for us? Was it worth it? And should we do more or less of it going forward? So using data, of course, to track the impact of previous decisions or investments is important to the majority of the response, almost the majority, and the slightly less than the majority of the respondents here. And then another question we asked was like, how do you do your reporting meetings? In our software, we can observe that companies, how frequently companies do their reporting. And we see that some companies are on a monthly cadence, and some are more on a weekly cadence. The companies that are on a weekly cadence tend to be a bit more successful. But the more important piece of this is that you're discussing your performance as a team. So what the majority of companies in our respondent pool here said that they send the reports and then they schedule a meeting to discuss the results and next steps. So it's really important to do that, have those discussions around the data with the team so that everybody knows where everybody stands and everybody can be involved in helping to strategize and improve that performance. And then another habit that came out of the survey respondent data here is that companies are not just setting things up and forgetting it. In any SaaS business, there are companies that cancel their subscription. And when we look at the companies that sign up for Databox and then cancel later, we can see that they do not change their dashboards and reports. We can see that they thought that at the beginning of the year, they could set up dashboards and reports and be done. And then we'd see them not making many changes throughout the year, and then inevitably those cancel at a higher rate. And the companies that do constantly change what metrics they're tracking, the goals, not just the values that they're achieving, but the goals that the KPIs that they're setting goals around on a regular basis are the ones that are more successful. And you can see here amongst the respondents that quarterly tends to be the most common time to reevaluate which metrics you're tracking, which metrics you're setting goals against, and what those targets might be. That's exactly how we do it, and also how we recommend our customers do it as well. If you're changing things every month, kind of drives your team crazy, and they don't know where to focus. They lose a little hope that you might have your shit together. But if you look at it quarterly, it usually gives everybody enough time, 90 days, to adjust, figure out these new targets, hit them or not hit them. And so after that 90-day period, it's a reasonable time or during that 90 period is a reasonable time for people to really put their best forward and try to hit those goals. And so if it didn't work, then you can revisit that in the quarter. If it did work, then you revisit the target that you might set the quarter after. In larger businesses, of course, they're going to do more annual targets and stick with it when there's more predictability in your business. But we found that in smaller businesses, say under 200 employees or so, quarterly is usually the right cadence. You should absolutely have annual targets, but because there's so much unpredictability in smaller businesses, it's important to be reasonable about how far ahead you're setting your goals, and revisit them when things do change. Okay, the last thing I think here from the survey, that's insight from the survey that we uncovered, is that there's a few more insights. Sorry. That top performing companies are tracking more metrics across their entire business. We actually looked at a subset of the survey respondents, about a third of the respondents, and we evaluated the success of them. And we found that third of respondents are more successful than the other 2/3. We looked at a few things like how often do they achieve their goals. We looked at the size of their company and assumed that larger companies are going to be more successful. And the longevity of those companies, how long they had been around. So we looked at those three things, found about a third of the respondents that qualify as more successful, and then we looked at what they did. And so you can see here that these companies are basically tracking their marketing, sales, and finance data at a very high rate. They're both monitoring and reporting. And so when we say monitoring, as defined in the survey, that means that somebody's looking at that performance, usually on a dashboard on a very regular basis, whereas reporting is more of a process that an organization goes through, where they're delivering a written report with data and an explanation of those results. And so if a company is doing both of those things for their marketing, sales, and finance, that means they're much more likely to be successful than if they aren't. You can see that customer success falls right below there, but not too far. And then, of course, a lot of these companies aren't going to have every one of these functions. So you can see, not every company has a product team or an R&D team. Not every company has procurement, logistics, and distribution. And so most companies are not, may not have that, and that's not going to show up high on here, but there are plenty of companies where those functions do exist, and they are reporting out and monitoring those at a pretty high rate. And so the key here is top performing companies track their whole business. It's pretty simply stated. They also widely distribute that performance. What I've found in our time here at Databox, excuse me, what I found here in my time here at Databox is that a lot of companies kind of hoard their performance data and don't really share it very widely inside the company. And you can see that here in the data. You can see 17% of the respondents actually don't share it beyond the senior executives and owners of the business. That means that they're really not sharing. How did the sales team do? How's the marketing team doing? How are the finances of the company? They're keeping that very close to their chest. And then you can see that almost 40%, 37.76%, only share that with managers and executives and anyone above. So in total, you can see that more than 50% of companies are not sharing their data widely, but that 45% of the companies are sharing with companies. And when we look at the entire data set of all 240 respondents, that number is actually smaller. So what that means is that top performing companies are a bit more likely to distribute the company's performance data more widely. I'm really kind of disappointed. It's almost a mission of mine to get this message out to companies that you should be sharing performance data more widely within your company for a bunch of reasons. In my experience, both at HubSpot and Databox, the more that we shared as an executive team, the more motivated, the more aligned, and the more simply aware each individual team member is around getting to our goals. And that's hard, right? It's hard to motivate a team that doesn't really understand where they stand or where the company stands. And so the more data that you can share with your team, the more bought in they'll be, the more aligned they'll be. For example, on alignment, if you have marketing data and sales data and you're not sharing the sales data with the marketing team, like it's really going to be hard for them to optimize the performance of marketing without that. But the more that they know about how the sales numbers are trending and why the sales numbers are trending, the more informed their day-to-day and week-to-week marketing decisions can be. So if you want to be an executive that dictates exactly what your marketing team should be doing or shouldn't be doing, then don't share your data with them. But if you do want a marketing team that it can figure out the strategy or execute that strategy at least on a day-to-day, week-to-week basis without much input, and ensure that marketing team's driving results, sales results, then you should be sharing that data. I'd say the same thing is true for financial data. Databox, we share both our revenue targets, our revenue numbers, as well as our cost numbers. And we even break down those cost numbers so that everybody has an understanding of what's costing us. And when we switched to that, we didn't do that from the early on. When we switched to that, we found a few things happen. One, they trusted us a lot more. People just felt a lot more confident in the future of the business because we were managing the business, not just for growth, but for profitability. And so they see that we are paying attention to our expenses and therefore we'll live to see another day through all of these changes like COVID and bank failures and all that, because we're being thoughtful about where our expenses are. And so they know that, and therefore they feel confident to bring their full focus and effort here at Databox. That's just one example of a benefit of us sharing that data. So I'd highly encourage people to do it. And we do see here in our survey data that companies that are more successful are a little more likely to share more widely. So highly recommend that if your company's not doing that. I'm happy to talk to your CEO or anyone else about sharing these kind of numbers if you think that would help make the case. All right. The next thing is, as I mentioned earlier, these more successful companies are setting and revising goals quarterly. They're also setting a slightly larger number of goals in the business than companies that are a little less successful in our survey sample. You can see here that the vast majority, the largest percentage are doing 1 to 5, but there is a good percentage of companies doing 6 to 10 or 11 to 20. At Databox, we're 104 or 5 people, 105 people, I think. So to give you a feel for our size, and we have 4 main goals for the year. And then under those 4 goals, that breaks down to about another 10 goals. So we're probably in that 11 to 20 mark. But those 4 goals are the main ones. Every other goal just really is a factor in those top 4 goals. Highly recommend having goals and then sub goals that support them that you can then delegate to different people in your team or assign or identify projects to help drive those higher level goals. And so that's the way most companies are doing it here in the survey sample as well. Okay, that is the data from the survey. Now that I maybe have overwhelmed you with all the things you need to do in your business to be more data driven, let me talk to you about how different technologies, including some algorithms, some AI, can help make this process more efficient and more effective. So first, I'm going to dive into the types of questions you should be asking in your business in order to get more predictability, more control over the controllables. The first one is, what level of performance is even possible? A lot of companies, are going about doing their thing. They invest in SEO, they invest in paid ads, they hire some salespeople, maybe they do some product development, they invest in their customer service, or et cetera, et cetera. But they have no idea what level of performance is possible. They don't know, okay, if we invest this much in SEO, what should we get? Or if we invest this much in ads, what should we get? Or if we hire 2 new salespeople, what should we get? So most companies are using historical data, but if you don't have a lot of historical data, you don't really know what's possible. And then who's to say that you know what you're doing already, right, is the best or the optimal? And so you really need to figure out what level of performance is possible. The best way to do that, I'll share with you in a second, is through benchmarks. The next question is, what should we do differently or more or less of to improve our performance? I think one of the biggest challenges in running any business today, or running a function inside any business today, is knowing what activities to prioritize, what things to experiment with, what initiatives to implement or test. There's just literally thousands and thousands of ways that you could grow your business these days. And it's really hard to say which one you should do or which three you should do at any given time. And so relying also on market research and business process benchmarks is a way to answer that question, which I'll show in a minute. And then the next question is, what can we do today to influence our future performance? A lot of companies know that if they say invest in more ads, right, then you'll get more leads, which will hopefully will turn into more sales. Or you might say, hey, we're going to hire a salesperson, and that will by itself get us more sales. Or hey, we're going to improve our customer service, which should help us get repeat purchases or get retention of recurring or subscription clients, depending on your business. So everybody kind of understands those high level correlations, but what most companies fail to do is really understand the mathematical correlation of those investments into the results, or understanding really the leading indicators, the metrics that you can measure as you're doing things that ultimately influence the lagging indicators, which are a byproduct of the things you might have done last week, last month, or even last year. And so understanding what you can do today to influence future performance based on the historical correlations of your different metrics. The next thing is understanding how we're likely to perform. Most businesses have some kind of seasonality, some more than others. But even with that seasonality, you're going to have fluctuations within a month, within a quarter. There's going to be certain factors that impact things. And so understanding how you're likely to perform on different metrics is really important for controlling the controllables. And then lastly, one thing that plagues many businesses is the fact that you have so much data to monitor, and that oftentimes there are issues in the business and that are detected too late. So you might, for example, realize that you're out of ad budget, but then maybe you realize that a week after your ads stopped showing. Or you might realize that your marketing team generated a boatload of new leads, but your sales team is too busy to take calls right now. And so you, again, wouldn't realize that until the next sales manager meeting, when you said, hey, my calendar is packed, right? Or you might not realize it until even later, after you look at the numbers and say, hey, our conversion rates really didn't hold up last month. And so understanding issues that might be occurring in the business that need to be addressed in order to ensure future performance is the fifth question that you really need to be asking yourself in order to control the controllables. All right, so let's walk through each one real quick. For those of you who skipped statistics class in high school, this chart might be a little confusing. So if you do understand this chart, bear with me as I explain it to people. This is a benchmark chart, often called a histogram or a hill chart. Imagine a hill that you run up and down, so think of it that way. What it's showing is a distribution of values in a sample. In this case, we're showing sessions. It's supposed to be sessions. Google Analytics. This is a fake. Chart, but these are sessions from Google Analytics, and what it's showing here is the distribution of companies. So there's a large number of companies. Let's see. Large number of companies in the sample. Let's just say it's a few thousand. I don't know the exact. There's 95. Sorry, 95 in this sample. And you can see here that 25% of the companies are getting less than 181,000 sessions, and 25% of the companies are getting more than 247,000 sessions. And then the median is here. It doesn't have a value on it, but let's just say it's right around 215,000 sessions last month, which basically means that 50% of the sample is less, and 50% of the sample achieved more. And so when you start to drill down into companies in your industry who sell in a similar fashion, B2B or B2C, and in your company size, you can start to get a feel for how companies like you are performing. Jennifer Lombardi at Kiwi Creative and her team are actually certified. We have a program where we certify marketing agencies and consultants to be able to interpret this data, deliver and interpret this data to companies, and they've gone through our course, which is about 15-hour commitment in learning how to interpret these and leverage this type of data to help companies understand what level of performance is possible, or at a minimum, where they're performing versus others. So that's the first step at trying to understand what's possible so that you can start to control the controllables, right? If your boss comes in and says, hey, I want to double traffic, and your budget is the same, and you can say, well, that's probably unreasonable. Or you can say, well, we can try these things. But going back to your boss and saying, hey, here's what companies in our size range in our industry are doing. And so if we're going to double our website traffic, that means that we're probably going to be in the 98th percentile, better than 98 out of 100 companies in the sample, or 98% of the companies in the sample. And you can start to make them realize that what is and isn't possible for the budget that you're maybe given. Same thing if you're the CEO or the boss, right? And you're trying to make decisions on where to invest or where to try to improve your performance, looking at not just one metric, but 10 or 20 metrics in your business, you can start to get a feel for like, oh, maybe we're overperforming here and underperforming over here. So what should we do about it? So the next question that you're most likely going to ask when you do benchmark your company's performance is, what can we do next to improve our performance? And so we've been working on this problem of helping companies set their strategy, or at least determine the tactics they should be using and how they should implement those tactics, for about 7 years now. We've run 1,300 plus surveys across all different types of business practices, from running Facebook ads and Google ads to how you build your landing pages, to which is research we did with Kiwi Creative, and to how do you staff your sales team, et cetera. So like we have all of this data about what other companies are doing. We make this freely available to everyone who's willing to contribute to the data set. And so all you really need to do is find the area of your business that you want to evaluate, and then you can complete the survey and get access to the anonymized data. We also publish reports where we quote some of the top performing companies, and you can read those reports on our website as well. And you can browse any of this data at benchmarks.databox.com, both for performance data as well as survey data. So this is just an example, which works better for your ads. A survey we did called the State of Facebook Advertising. And you can see here, at the time, at least, Facebook automatic placements weren't as good as manual placements. According to the survey sample, of course, the margin there is pretty slim, meaning that they're both pretty good. And then which buying type are you using? So, if you're only doing reach and frequency buying, then maybe auction buying should be something you look at, or maybe you should do both. So these are the kind of questions that you might be asking about your sales, marketing, customer support strategy, et cetera. And so having data about what other companies are doing is really important. The research that we did with Kiwi Creative was specifically how do B2B tech companies build and manage their landing pages. And so there's insights there specifically for B2B tech companies that you can grab. All right, the next question, after you get a feel for how you should be performing and what you can do to maybe improve that performance, is what can you do to better influence your performance today? These are just some screen grabs of what we call data blocks at Databox. With data blocks, you have multiple data blocks on a dashboard. But you can see there's different ways of looking at data. Here you can see both sessions and conversion rate tracked on the same chart. So we can see even though sessions is pretty erratic, but also not really trending up or down necessarily, whereas the conversion rate has increased over time. So knowing that your conversion rate is going up while your traffic's flat is important context to understand in when you're understanding what you can possibly influence in your business. Same here for users by channel. You can see here on different channels, how the number of users on a website or by device are trending. So these are the kind of things you want to be looking at to really understand what can you influence in your business today. And if you're not tracking these things, then you're just not going to really be able to consider what you might be able to change in your business in order to improve performance. The other thing, and this is something we're working on, we haven't actually launched this yet for users, is data correlations. So there's relatively straightforward math you can do where you can say how correlated is this metric to another metric. So in our business at Databox, the number of people that sign up for our free product correlates very well to the number of new customers we get every month. And so, we can set a target for the number of people signing up for our free product every month, and then marketing can go and influence. And so, because we know that correlates really well to new customers, we can make a really reasonable bet on exactly how many more signups we need in order to get a certain number of new customers every month. And so in every business, there's these types of correlations. In a SaaS business like ours, there's also a lot of correlations around retention, right? I can very accurately predict whether an individual customer is likely to churn or cancel their subscription. But that's after looking at hundreds of different metrics that we track. And so in your business, it's going to be different, but understanding those correlations is important. In some businesses, there's going to be correlations that are similar. And so there are ways for us at Databox to identify some of those correlations quickly for our users. And then, of course, there are ways that we can look at correlations across any business or inside any business and understand what the correlations are, or the level of correlations you have. Once you understand how correlated two metrics are, you can also think about how you influence that. So if, for example, if I know that our free signups for our free product convert to a new customer at a specific rate, I can try to influence that, right? There's things that I might be able to do, after someone signs up before they buy, that actually influence their purchase. And so the idea here is by monitoring, not just measuring your correlation, but monitoring your correlation, you can also start to see ways that you can improve your performance, and how those things are actually, whether those things are improving your performance or not. So for example, we have a metric we call product qualified leads. So when somebody signs up for a free product, we measure how much of the product they get set up, how frequently you use it during the trial period or on the free plan, and we can see, are they qualified or not to buy, or are they likely to buy? And so then we can run experiments in that onboarding process, that customer onboarding process, where after someone signs up and before they become a product qualified lead, to try to increase the number of companies that become a qualified lead. And so by playing with those things, we can actually improve the correlation between the number of free signups we get and the new customers we get. So really, by having these correlations, understanding these correlations, it allows us to design experiments or change processes in order to gradually improve performance. The next thing to understand is how likely you are to perform in the future. In Databox, we have a standalone feature for forecasting where you can forecast any metric. So not just your sales, but any metric you want, whether that's your customer retention, whether that's the traffic on your website, whether it's the number of leads you get from a specific landing page. You could forecast that data. It's based off historical data that we have, and it identifies a range where the metric is likely to fall. And so by understanding these things, you can start to figure out what is future performance going to look like, right? Especially if you also understand correlations between different metrics. So this would be the fourth thing. It's starting to control the controllables, right? That if you do the things you did in the past, that the performance of your company should be similar or better than what you had already achieved. And so by using that data and forecasting future performance from that data, you can have more insight into the future. And then the last thing is anomaly detection. Also something we're working on, not out of the labs yet, but will be soon, is anomaly detection, where once we understand where your performance for a specific metric is supposed to fall, we can start to identify when it's not in that range and automatically detect that. So if we go back to some of the examples I gave earlier, say that your budget runs out on your Facebook ads campaigns and you don't notice it, you will notice that the number of clicks you're getting from Facebook ads or the amount of money spent on Facebook ads will be outside of the forecasted range, and therefore you'll have an opportunity to identify that. And if you're tracking lots of your metrics inside Databox, which is the point of Databox, is you track all your company's performance in one spot, the system will be able to identify those things that are outside of the normal range and alert you to it so that you can address it right away or as soon as possible. And so those are the 5 things that allow you to control more of the controllables and really start to predict your future, your performance. And so by having the processes that we talked about that we uncovered from the survey, like tracking all your metrics, like setting goals, setting the right amount of goals, providing transparency of your performance to your entire company, and then using AI technology to better benchmark, correlate, forecast, and detect issues, you can all together start to better, more predictably improve your company's performance. One last thing, generative AI. I know that marketers love generative AI. We're all using it in some form or fashion to produce content. It's also really handy for analyzing data and also really handy for explaining the patterns in that data. And so one of the things that we have in our product as well that helps companies better understand and distribute performance data across the company is a generative AI report builder, which allows you to automatically spit out in words how your company is performing based on the metrics that matter to your business. So highly recommend checking that out. You can try all this stuff for free. But maybe you're not quite ready for all that stuff. What I would recommend is our free course. We have a free course called Predictable Performance, where we walk companies through exactly how to pick the KPIs you should be tracking, which KPIs you should set goals around, how to set those goals, how to track all of that information, how to distribute that to your team, how to build a model around your business so that you can start to correlate and forecast your performance, etc. All of this can be done without Databox software, and so the course is designed to really teach you the principles so that you can go back in and start to be more data-driven in your company if you so desire. I'll leave it at this. One pattern that we see companies make a mistake with all the time is that they assign being data-driven to one person, and they say, "Oh, that's our data person over there." That is the wrong approach to doing this. The way to really be data-driven is to create a culture in your company around it where, again, everybody has access to the data, but also everybody understands and has a number over their head or has a goal that they're responsible for achieving, so that and they know how that goal connects to the overall targets for the company, the larger targets that will help you and your company achieve your mission. So highly recommend this quote from Steve Jobs here: "Great things in business are never done by one person, they're done by a team of people." And that's certainly true for measuring your performance and improving the performance of your business. All right. I think we're done for the formal presentation today. As I mentioned during the presentation, we are partnered with Kiwi Creative. We've created a bunch of free offers together. If you go to these links here, I imagine Jennifer can share them in the chat too. But if you go to these links, and you'll see that Kiwi Creative is offering a few benchmarks. One of those benchmarks is how your B2B tech company performance compares to other B2B tech companies' performance of companies that are using HubSpot. So assuming you're using HubSpot because you're here, there's, I think, several hundred HubSpot, several other B2B SaaS or B2B tech companies that use both HubSpot and Databox. And so we were able to put this benchmark data together. It's anonymous, so you won't see who's in there, but we know who's in there, and we vetted them to make sure that they're B2B SaaS companies. And Jennifer and her team can walk you through how your performance compares to that other group of companies, that group of B2B tech SaaS companies if you want. Also, as mentioned earlier, we did some research on landing page best practices for B2B SaaS and tech companies. I'm kind of surprised I'm still talking about landing pages in 2024, since I was selling landing pages in 2007 while I was at HubSpot. But I will say that as a company that generates lots of leads online, we're constantly trying to figure out what offers should we have, how should we design those landing pages, what should those landing pages say, what should the flow be, how do we get people to them and stuff. So there's all kinds of data in this report that will give you insights into how other B2B tech companies are doing it. And I think it's probably something that most SaaS companies should be tweaking all the time, both tweaking and testing their landing page and lead capture strategy. So the research should be insightful for you if you're one of those. All right, I think we're done here. Jennifer, how are we doing?
Yeah, I popped the links to those 2 assets in the chat. They'll also be hyperlinked in the PDF and in the YouTube description when we get around to uploading the video this afternoon.
Cool.
I did ask for questions in the chat. Nothing popped up, so we can stall for 30 more seconds here.
Okay.
Questions are dying to ask Pete about
anything. Doesn't have to be just about what I talked about today. Happy to answer.
Yeah.
It's should you buy HubSpot stock is one of them I see. Just joking. Are we allowed to give investment advice on a HubSpot Hug about HubSpot? Probably not.
I'm 100% positive that's against the laws of the partner program. So I'm going to go with no.
I won't share.
All right. Brent just has a kudos, no specific question. He says, great session, very interesting and lots of insights. Thank you. So I think with that, we will conclude. Like I said, we'll upload slides and video so people can access that after the fact. And thanks again, Pete, for talking.
You have a question. Thanks for having me.
Bye.